In this video, we're taking a look at the cup and handle trading pattern. Unlike many of the other chart patterns that we discuss in this module, this does not have an inverse. But a cup and handle is pretty straightforward. It's supposed to represent a teacup. Basically, it's a rounded bottom, which you've learned before, and then it's got a little bit of a pullback and then eventually a move higher. It is a reversal signal. It's a bullish reversal signal. It doesn't happen that often necessarily, but it is something that a lot of people will follow. There is a possible measuring stick with it, but most people use it for a trend change period. They don't even necessarily try to measure it. They just take advantage of it. And think about the psychology that's going on here. We are in a downtrend and things continue to go a little bit lower and people feel better about it. And then it just kind of quiets down. Some people will take profit. Eventually more people will take profit. And then people will begin to be a little bit more concerned. We start to drift off, and then eventually we pick up some momentum and trading starts to pick up again, a lot of times with volume, and it just confirms a reversal pattern at the bottom of a larger move. So on this chart, I have a short-term cup and handle pattern. You can see that there's the rounded bottom, if you will, and then there's the handle. The handle always pulls back slightly, and then you get this massive amount of volume, and then Bitcoin just takes off. So there's a couple different ways that you could have traded this potential move. You could try to measure the cup and handle like this. So there's your handle, and then there's your entire height from 8,000 to 9,000. And then on the breakout above the top of that resistance barrier, you add 1,000 because it is $1,000 thick, if you will. And your target would have been 10,000. You can see that we did, in fact, have a little bit of a reaction there, but why wouldn't you? $10,000 is a very large round number. And then you just continue higher. You could have traded it that way. You could have put your stop underneath the handle. Some traders will just simply hold because they believe that these patterns, these cup and handle patterns, are so monumental that they just assume that the trend continues. And in this case, that would have paid off all the way to 11,750 before we got a significant pullback. You can see that there is a lot to be said for this pattern because it is complex. It takes so much time to set up. Remember, you've got all of that. It's not even really selling pressure. It is in the beginning, but after that, the market just seems to lose interest. And then there's another attempt to fall from there, and then it doesn't. So while the pattern is called the cup and handle, you could almost make it something along the lines of a downtrend followed by general lack of interest, another attempt to continue the downtrend followed by a complete lack of interest. So think about the psychology always. You should always think about the psychology of what the participants are feeling on both sides. This high volume green candle that breaks out of resistance has the buyers feeling pretty good. At the same time, the sellers feel bad. They have to reverse their position, and then we continue to rally. Cup and handle is a pattern that matters more on higher time frames, but the cryptocurrency world is fairly new, so you don't see this a lot, say, like on the daily and certainly not on the weekly charts. However, it has its roots in the stock market, which, of course, a stock like IBM or some of the other stalwarts like Amazon, Apple certainly conform these, and these can take place over weeks, if not months. Shorter time frames, of course, happen, like this example, and they do mean the same thing. And in the cryptocurrency world, that's pretty much where you're going to find these.